I will be talking about cross-border compliance and regulation. Um, I, I mean, in terms of why I'm qualified to talk and speak on this topic, I think Daniela has done a pretty good intro. So I handle operations, or I'm the head of operations at Legal Trunk, and we've spent the last 5 years at least helping startups, helping hundreds of startups across the African continent to register, manage, and scale their entities globally. So this is essentially what we do. Um, for for this presentation, I'm just going to be talking through a couple of things. First of all, why this is important is that startups are scaling increasingly across borders with technology making the world accessible. I mean, you go on TikTok, you go on Instagram, and you're seeing content, you're seeing posts from people all across the world. As a business owner, whether a service provider or someone selling products. People are also seeing have people now have access to all these things that you're selling as well from all over the world. And so compliance is one of those things that is important that you know beforehand, just to prevent s- you know, unwanted or unpleasant situations down the line. And just like Daniela said, it's not just about avoiding costs. There are different factors to it, and that's just what I'm going to be talking about in my session today. So people are, scaling across borders for several reasons. Maybe you're trying to raise funds from international investors. Maybe you want to acquire customers globally. So, say you have a fashion brand based out of maybe Nigeria or Kenya, but you want to sell to an international audience. And these are things that, internationally people are getting more interested in just even experiencing things from other cultures. So, this can just be a reason for you to want to scale. Or maybe you're building on the infrastructure that is regulated in other jurisdictions. And this is a very important point that I will come to later in my presentation. So by this, what I mean is you have a company that is based in Nigeria, based in Kenya, Ghana, um, but your infrastructure is based elsewhere. So maybe you use AWS, you use Google Cloud services or whatever other service that obviously is not hosted in the country which you are operating in. Already there's some cross-border arrangement or like transaction that's happening there, and for that reason you just need to be aware that sometimes there may be things that would affect your business, and to be able to plan for, to be able to adjust for those things. Compliance gaps are not just, it's not just about the legal risks, they can also be blockers to your growth because failed compliance could lead to several things like penalties, yes, but it could also just lead to you losing out on investors who would, do due diligence. Yesterday we talked about due diligence and the kind of things that investors look out for. Non-compliance with regulations that apply to you is one of those things that is one of those things that investors look at and could make or mar, like could be the deciding factor on whether or not you get some investment or funding from an investor. And so this session will just help you to understand what's the reality of cross-border compliance, where are the areas that founders tend to get into trouble, just, based on our experience, based on our expertise, and how can you build the legal infrastructure that helps you scale your business and scale in the right way and sustainably. So, I will first of all talk about what does cross-border compliance look like? Like when we say cross-border compliance, what does that even mean? And like I said in my previous slide, first of all, it can be raising from international investors, it can be having your infrastructure hosted elsewhere, but I would just like touch on it from um, these three key areas on my screen. So first, you can have a home jurisdiction, which is where your company is incorporated. So if you have a company that is registered in Nigeria, that's your home jurisdiction, right? A company that's registered in Ghana, in South Africa, that's your home jurisdiction. Why is this relevant? It's relevant because where you are registered is where you'll be taxed. So wherever you're registered, you would need to like do tax filings, there'll be compliance matters. The ownership structure may also differ. So, depending on where you're registered, you may need to maybe have a particular number of owners um, that have shares in the business. Um, for some, it can be a minimum of two, it can be at least one. The sort of even the kind of entity structure differs based on location. In some countries, you may be able to register as a limited liability company. In others, may be able to register maybe as an incorporated. Different countries have their different structures, and then the local laws that apply would also be different. So you want to have a good grasp of all these things. And then you have your operating jurisdiction, which is essentially where your customers are based, where your users are, even where your employees are. Sometimes your home and operating jurisdiction can overlap, but that's not always the case. And what I mean by that is you can have a company that is registered in Ghana and you're servicing your customers who are also in Ghana. Your employees are residents in Ghana as well. And so everything you do is in that same jurisdiction, in which case your home and operating jurisdiction overlap. But if, say, you're registered in Ghana, or in Nigeria, and you have employees from Ghana, you have maybe customers from Ghana, and there's a lot more like interaction you have with other countries apart from your home jurisdiction, then that would also be a country where you are operating. And because of that, there might be implications for that. So implications would entail things like, first of all, tax obligations. If you have an employee in a different country, there would definitely be tax implications that you need to be aware of. You may need to file, the income taxes on their behalf or not, depending on what kind of agreement you have with them. There would be data protection laws that would also apply based depending on the jurisdiction. So, if you are handling personal data from a particular region, the data protection laws of that region applies. So, and I mean, we will talk about data protection a bit in a little bit more detail than this. There would also be things like consumer protection. There will be things like employee and labor laws applicable as well. There are certain jurisdictions where you can't just fire someone anyhow. There are severance packages that need to be done. There's a time limit by law that needs to be given, and it differs across regions. The labor laws in, say, Nigeria is very different from labor laws in Kenya, and if you are hiring someone from there, you need to be aware of those things just so that you don't incur legal liability in that country just out of ignorance. One of the things that we always say is that ignorance of the law is not an excuse. As far as you are getting to a point where you are starting to have cross-border operations in whatever form, you need to begin to think about the legal implications of those operations. And then the third thing that I wanted to just raise about cross-border um, operations is capital, which is where your investors are based or where your banking infrastructure resides. So, what I mean by this is if you can have an African startup and then have investors from other regions, so you can have maybe US investors or UK or EU investors. That's where your capital is coming in from. As a result of having those investors, they may also want to, fund your startup through an entity that is um resident in any of those jurisdictions that I just mentioned. So you may now need to think about having a company registered there, having a bank account registered there. So that's just your capital jurisdiction. Why does it matter? It can be an investor requirement, like I've said. You may need access to banking services. So say you want to be able to hold different currencies outside of your local currency. You may want to open an account in some of these regions. And yes, there we have some solutions, say in Nigeria or in Kenya, where you can, even from your home country, do that. But sometimes you may want to just, go ahead and open one account directly in the country where your investors are based and things like that. All of this essentially is, different spheres or different angles to cross-border operations. And in every single aspect that I've just mentioned, compliance is very important because these things um, influence how you do business, influence how you're even able to carry out your business, and just making sure that you don't run into any troubles. Okay, so I would be touching on a few points for cross-border compliance. I'm so sorry about my background noise. So I will be touching on a few points for cross-border compliance. The corporate structure, regulatory compliance, data protection, intellectual property and licensing. Those are essentially some of the things I'll be talking about. But before I dive into that, I just want to have a sense of where the room is. So, where is your startup located? You can scan the QR code on the screen or just go to slido.com and put in these numbers and answer the poll. It is anonymous. You just need to like pick where is your startup located. I want to just have a sense of the room and what what the variety or what the diversity in the room looks like. I will give a minute just for people to do this. Hey, I see some answers. So just in case you're a bit confused about what the questions are, so I just want to know where is your startup located? So if you have only a business that's registered in your home country, like where you live, where that's where your business operates, and that's where you're registered, just fill that in. If you have a business that maybe is registered outside of where you are based, so maybe in the US, in the UK, or in the EU, you can fill in the second option. If you have a business that you have, so if you have a local entity and you have a US, UK entity, you fill out the dual registered option. And if you're not yet registered, you're just here, figuring out things. Maybe you're still in like the very early stage where you are um assessing your product market fit and things like that, you can just pick the not yet incorporated option. Um, okay, so I see we're starting to have some answers. I will give it a bit more before I move on from this slide. And also just to say that even when at the moment the general consensus seems to be, just registered in your home country. Even when that is the case, there's still things you need to be aware of. And I would touch on that as I move on. Because you may have a company that is registered in only one place, right? But because you are maybe selling online and you have customers from other areas, certain laws would apply to you. And sometimes is it to just be like, well, my business is on Instagram, maybe, or it's a small business. Do I really have to do all these things? Who's going to know? Um, I'm here to let you know that, yeah, you do have to do these things and you want to do them early on just to prevent issues when maybe you grow bigger, you scale, and things like that. Okay. So I see that the people who have filled in this have said they have a give me a second. Okay, hi everyone, I'm back. I just needed to move away from that noise just so it doesn't keep distracting us. Okay, all right. So I will move on to my next slide now. So Excuse me. There are a couple of things that I would say to think about when we are looking at cross-border compliance. The first is your corporate structure. By this, I mean, what kind of entity should you have registered? When should you register in another jurisdiction versus just in your home country? And then what are the expectations your investors might have of you? So first of all, what kind of entity should you register? Should it be an LLC? Should it be a C Corp? And then, like I said earlier, different countries have different business structures. So, for instance, in Nigeria, there's the business name, which is a sole proprietorship essentially. So, is it that called? I mean, depending on the region, some countries call it sole proprietorship business, which is essentially just one person, simple business, no difference between the individual and the business. We also have partnerships, which is two or three people up to at least 20 working together on a business. Again, the key thing there is that there is no difference between the partners and the business. So there's no the liability is not limited. The liability of the business is the liability of the partners. And then we have limited liability companies called LLCs in some countries, called LTDs in some other countries. And it's essentially where the liability of the company is separate from the liability of the founders. So if for any reason anything happens as a founder, you know that you are protected. You know that um, if your business say things don't go right, you have immune not immunity, but your assets or your shares are protected from the liability of the business just because it's a limited liability company, right? And then in regions like the US, for instance, there's also the C Corp. So the C Corp is a bit different in that not only is it limited. Not only is the liability limited, you also have shares. Whereas in the US, for LLCs, you don't have shares. It's a limited liability company, but there are no shares to be assigned to the members in the LLC. So, like I said, different companies, different countries have different entity structures. And the first thing is you want to be able to answer what kind of structure should I have where I am operating my business, right? And to help you with this, you need to think about what's the long-term goal? Where am I trying to go with this? Um, is there any possibility that I would need to raise funds from investors at any point down the line? If there's that possibility, the kind of entity you would register would be different from somebody who is maybe just starting a family business and is within, just the members of their family, or it's just like a sole ownership business. The entity structure is different. Another key thing is also at what point should you register or should you begin to think about registering in another jurisdiction, right? Like moving out of your home country. I think, first of all, it will go without saying that it needs to be, you should have gotten to a point where you are making revenue because revenue is probably what would influence you to expand into another market. It can also be because you have investors, and those investors have an expectation of you. So most US or EU, UK investors require you to have a holding company in another region to raise from them. So rather than that invest directly in your local Nigerian or Kenyan entity, they would invest in the entity in that region, and then that entity would sort of be a parent company to the one in the local jurisdiction, which will now be the subsidiary. We talked a bit about this yesterday, so I would not overflog the point. The recordings for the sessions would be made available and shared, so you can always go over it. And I think the conference is supposed to be like a holistic thing, so over, I will try to not dwell too much on areas that have already been touched on in previous sessions. So, and yeah, when you now have two entities, maybe because you've gotten to a point where you've identified that this is a need that you have, then you need to be able to manage both entities. So you have an operating entity, there would be requirements, there'll be expectations, and compliance obligations that you would need to meet. And then even for the foreign company where the sole purpose of that company is, say, receiving funds, there are still compliance obligations that you need to meet. You need to, comply with in those jurisdictions. And then different entity types come with different requirements. Different countries also come with different requirements. So in whatever countries you are, you need to be aware of these things, which is why it's always a good idea to have a clear picture before you get to that point. Sometimes people just think, oh, every startup that is growing has an entity in this region. I want to register my company there, and maybe you don't have a clear, defined revenue path yet, or you haven't even had, you've not gotten to the point where you have investors asking you for that. A lot of the time when you register before you get there, a year down the line, and that first year I found passes really quickly, and suddenly you're just like, oh, but I just registered the company. I haven't started anything. I haven't done anything yet with it. But there are requirements that now are automatically on you, and you need to do those things. So it's always important to be sure that you're at the point where you need it before you do it. Which takes me to my next point on regulatory compliance. So as I just said, different jurisdictions, different compliance requirements. So for instance, in Nigeria, when you have a company registered, there's the annual returns you need to file with the CAC, with the Corporate Affairs Commission. In most countries, there may be different names for it, but there are similar filings you need to do. There are also federal tax returns that you need to file with the Internal Revenue Service of whatever country you're based in. This applies across jurisdictions, even if there may be different names for it. If you're providing a goods or a service that is VAT chargeable, that's the value added tax, you would also need to be remitting that to the relevant authorities. Um, if there are other taxes, if you have employees, you might need to, depending on where you're based, you may need to be remitting the income tax of your employees for your employees. In the US, states have franchise taxes, which is essentially because you're registered in our you have a company registered in our state. This is an annual fee that you pay. So it can be called a franchise tax or an annual license tax. And that's a yearly fee. It doesn't matter whether you did business or not, as far as your company is registered, you're paying that. There's the registered agent fee, where for most states there's the understanding that people are not always based in a state where their company is registered. So you pay an annual fee for a physical address that is resident in that state where your business is. And then there's a fee for it. It's compulsory, because if you don't, the state assumes that, oh, you're no longer in business. And after a while, they shut down your business. So these are important things you need to do. There's also the federal tax returns. Federal tax returns, irrespective of whether you're making income, whether you're not yet operational, you need to file. And it's important that you file this early, because you don't want a situation where you've raised money, and or maybe you're in the news. This happens a lot, by the way. You're suddenly in the news for something, you've done a big round, and the tax man comes knocking on your door like, this company that we just heard of, I don't know that if and they look through your records, you haven't done the filing. Now you have to do the previous filings. There are penalties that apply as well. So these are things to think about. In the UK, we have the confirmation statements. There's the corporate tax returns with HMRC, and then there's VAT that also needs to be filed. That's just an overview. This is a non-exhaustive list. The key thing that I'm just trying to communicate here is that there are things you need to do, and for whatever jurisdictions that your company is based in, you must be aware of those things. The next thing you need to be aware of is data protection. Most countries around the world are, I mean, a lot of countries have data protection laws now, and I think this 2026, I should think that most countries have some form of data protection regulation. Um, Essentially, what this means is that if you are processing the personal data of anyone based in a country, the country would have laws as to how you process that data, as to how you deal with it. And that includes things from how you store their data, even what kind of data you're collecting. So there are principles like data minimization. Are you collecting data that you need, or are you just collecting absolutely anything? Um, I had a I had an experience recently, actually this week. I was trying out an app, and I wanted to add friends on the app, and the only way I could do it was I had to, okay, well, not the only way, but the major way was, oh, I had to share my contact. And I was going to, and then I read the things that they were going to, that they were requiring from me. And they're like, oh, you need to share the name, the email address, I think the birthdays, the addresses of the people, and I was like, at best, you probably only need their email address if you want to find, like, just to make sure that they're also, that's if my friends are using your um app as well. Why do I need to share all this other personal information with you just because I want to connect with my friends on the app? And I just canceled it, and I didn't go ahead with it. And it's one of those things where if you are building an application, you need to be able to ask yourself, do I need all this data that I'm trying to collect from people? And we live in a world where everybody or all different companies are collecting all sorts of data about people, but it shouldn't be so. You should only, I mean, generally, data protection principles require that you collect only the data that you actually need for the fulfillment of your services. You also want to be able to say what's on what basis am I even collecting this data? What's the reason? What's the basis for processing this data? So if say you have a physical product and you're delivering the product, then you would need to collect the name, the phone number, the email address, and then the physical address of the person that you are sending that product to. But if you have a service that maybe you're selling an ebook online, there's no reason for you to ask for the physical address of your customer because you don't need it for anything. It's not relevant to your business. So those are just some things to think about when it comes to data protection. And even though in Africa, for instance, data protection enforcement is still growing, you need to be thinking about not just where you are, but where you are trying to go. Eventually, all these countries would catch up to a point where their enforcement is um, on point, and you don't want to be caught unawares at that point. For instance, in the EU, if you have customers that are based in the EU where the GDPR applies, your company needs to comply with the GDPR, right? You need to have a privacy policy that complies with that because if you don't, and maybe there's a breach or you're sued for any reason, that's liability that you don't need to be thinking. That's liability that can easily be avoided by just complying. Um, I know that for most companies, sometimes depending on the scale of the company, for big companies, they can afford to have maybe different privacy policies for people in the EU versus other parts of the world. But if you're a small company that's just starting up, it may be better for you to have one privacy policy that follows the highest standard or the strictest standards, so that in the country in the countries where you have customers with strict data protection laws, you're covered. And if there are countries that their laws are not as strict, that's still like a lot of protection for your customers. So that's just things for you to think about. So just like I have on my slide, you need to have a privacy policy that reflects your data practices. How do you use your data? How do you hold? Where do you store your data? What basis are you processing? Are there any third party tools that you're using, and what is the data processing agreement you have with those tools? It's not enough to say, oh, I use this tool for this service. You need to also know what are the data protection what are the policies, or how do they process their data, because you want to make sure that whatever data you're sharing with them about your customers is also protected just the way you're protecting it. And then another thing is just data protection by design, by default and design incorporated into your products. So like I just gave this example, you don't want to be collecting data that you don't need, that is not relevant. Because yeah, not every customer may read the fine print, but there will be people that would, and all it takes a lot sometimes is one customer to just be like, you know what, I'm going to take your business on, and that happens a lot. We see cases where one person just looks at a law. I can think of like a lot of cases off the top of my head where a customer just looks at your data protection law, and they're actually, this, I want to exercise this right. I have this right under my data protection law as a citizen of this country, and I want to exercise that. And now your business is open to that. So it's important that you just incorporate these things by default to ensure that you're protected from things like that. The next point I want to talk about is intellectual property. Um, so the first thing about intellectual property is that, for instance, with trademarks, actually with IP is territorial, so you have protection where you register it or where you protect it. So if you have a trademark registered in Nigeria, the mark is registered in Nigeria, it is protected in Nigeria in the class, not just even in the country, in under the class which you've registered it. If there's another person in another country using that name, if you're not registered there, there's really not much you can do, nothing you can do about it because your mark is only relevant where you register it, right? So an important thing for you to think about where the country, in what countries am I registered, am I operating, or is my business ongoing? And if you're getting to a point where you're starting to build a brand and have significant presence in certain markets, it might be a good idea, excuse me, it might be a good idea and a good business strategy to protect your trademark in those countries. Which takes me to the next point on the WIPO international trademark system. So WIPO, that is the World Intellectual Property Organization, has a system where you can register your trademark in multiple countries under one registration process. There's at least 130 countries that are signatories to this agreement. And so one thing you can also think about is the country that I want to register in, or the countries I'm thinking about, are they under this Madrid system? And if they are, maybe I can just use one registration and register in those countries as well. So some countries that are registered in the or that are part of the Madrid protocol include there's Ghana, there's Kenya, there's the UK, the US, certain EU countries. There's the African Intellectual Property Organization, which which contains some West African countries and some other countries. It has countries like Liberia, Mali. There's about I think about 10 countries that are part of this specific organization. So if you have a business in some of these countries, and say, I know that I have a business in Kenya and I also want to maybe do stuff in the US or in Ghana, you can register under the Madrid system. Unfortunately, Nigeria is not a signatory to this agreement at this time. And so if you have a trademark registered in Nigeria, you would have to register in these other countries separately as well. But for countries where that are part of it, you can take advantage of this system. And then the next thing is that a lot of countries have a first to file system, which means that the person who owns a trademark is the first person to file it. Countries like the US have a first to use system where if you've used the trademark, if you have already used the business, if you've used the mark in business and you can demonstrate it, you may be able to have priority over someone that is just trying to register the mark but hasn't used it. But in countries like Nigeria, in the UK, it's a first to file system. So it's whoever files the trademark that has protection over that trademark. And so you want to make sure that you've registered your mark. There are a lot of all the time we see cases online. We see these issues come up where somebody is using a mark that they haven't registered, and then somebody else goes to register the trademark. If there's no objection, I'm sorry to say, not a lot you can do about it because if you're in a first to file country, is whoever files first that has that protection. So this is why, thinking about your IP is important. Um, Another thing that I just wanted to add is like the if you register a trademark in one country, let's say under the Madrid system, and then you want to file in another country, you can claim the first date that you registered. So if you register in Kenya in January of this year, and then you want to maybe register in the US by like June, you can claim the priority date, which is January, to also have the trademark protected in that country from January, even if you're just registering it in June because of the system that I've just explained. And then licensing is another thing to think about for cross-border compliance. So Licensing is sector specific and jurisdiction specific. So by that I mean that different sectors have different filing requirements and different jurisdictions have different requirements as well. If you're a fintech or if you're a financial technology company operating in certain jurisdictions, there are licenses that you may need to have. So if you're in the in Nigeria, there's the CBN licenses for whatever kind of fintech you're operating that you need to get, or you need to, have the maybe a partner that has that infrastructure that you're working on. In the UK, there's a financial conduct authority that regulates things like that. And then just broadly speaking, there's the anti-money laundering and know your customer obligations that apply to fintechs. You want to make sure that you're complying with these obligations in the countries where you're operating. Again, that point about not just the home country, but your operational countries. If you're operating in a country, there are laws that might apply to you. If you're in the Web3 space, there's the virtual asset service provider regulations that are starting to apply across different countries. In the EU, there's the markets in crypto asset regulation. In Nigeria, we recently just had there's the revised Investment and Securities Act. There's also the digital assets rules that the SEC has introduced for virtual assets service providers, and their requirements to qualify as a virtual asset service provider and offer that service. You want to be aware of those things. It differs based on the country, based on the region. There are other sectors that are also often overlooked, like the healthcare sector, education, agri-tech. These are overlooked, but there could be licenses, there could be regulatory requirements that apply to you, and you must be aware of these things. Another thing that I just wanted to mention here as an example is recently the CBN that's the Central Bank of Nigeria, has just released a regulation that says that financial institutions or companies that are handling payments in Nigeria by January of next year must make sure that the data of their customers is localized in Nigeria. Now, there's been a lot of reaction to that regulation, but if you are someone that is in that industry, that's something you need to be aware of. That's something you need to start thinking about. I mean, whether or not it makes sense, whether or not it works is an entirely different conversation. But that's just an example of how, cross-border compliance applies. So, for instance, if you are a Ghanaian company or a Kenyan company that maybe is receiving payments from Nigeria or has customers in Nigeria, and you're processing some payments, or a fintech in any country outside Nigeria, that means that for your Nigerian customers, you would have to be thinking about how to make sure that the data you are collecting or storing from them um is residing or is localized or like is held or stored in Nigeria. So, as I said, this is why cross-border compliance is important, because if you have customers, if you have people in other jurisdictions, then you want to make sure that you are complying with the laws in those jurisdictions. So I'm going to just breeze through some of these just so that, okay. I'm going to talk through my this part just because we've touched it in the session yesterday. So compliance is one of those things that investors look out for. You're not just complying for regulatory reasons, you're also complying for fundraising reasons. And what compliance looks like is ensuring that you have the right entity type or corporate structure, that your cap table is well defined, that you're complying with your data protection obligations depending on which countries you're operating in. You have your proper documentation, you have evidence of your tax filings, your regulatory filings. Compliance is one of those things that investors also look out for. And if you are operational in multiple jurisdictions, is even more important because investors want to see that you are complying with the compliance requirements in the different jurisdictions where you are operational as well. Um, for founders, this is just a short checklist of what are some things you can think about while you are thinking about compliance, right? So, first of all, You want to ensure that you have the right corporate structure, like I said. You want to ensure that you have the proper documentation for your founders. You want to have privacy policies that are well aligned to your data practices, that clearly state the source of data you're collecting about your customers, the where that data is stored, how it is used. These are things that are becoming increasingly important. And even I mean, as a business owner, you're also a customer. So these are also things that you also need to, be thinking about as a customer to other businesses. You want to make sure that your data is used properly, is stored properly, is not being misused, it's not being sold to third parties or, used improperly. And so a privacy policy ensures that. You also want to make sure that you have your trademark registered in your home country and in whatever priority countries or markets that you're operational in. Like I said earlier, a data processing agreement that clear data processing agreements with third parties, ensuring that they are also handling your data and the data of your customers in the same way to the same standard that you're handling them. Another thing you can also just do as a founder is a data protection impact assessment. Um, an assessment that says what data do I hold, under what law is it being held, um, how is it being stored, how is it being used, how is it being processed, um, what do your investors need to see? Do you have all that they need? Is your AML KYC policy well documented if you are a company that deals with finance with money or excuse me, if you're a company that deals with, finances or manages finance for people, that's something you need to be able to answer. And then even just evidence of your regulatory filings. Do you have the licenses you need to operate? Do you have your tax filings done? And do you have evidence of all these things? So, yeah. So that brings me to the end of my presentation. And I will conclude by saying that it's not just important for you to think about the short term. You want to think about where your business is going. You want to ensure that you are building a sustainable business, a business that stands through thick and thin, and